Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Monday night for trading Tuesday, March 23rd, 2010. Traders, a couple of things on the board. We have an outside day up in the leading indices and a nice little bull flag in the ES, one of the followers. And the transportation average had a nice turnaround day as well and stayed within its channel. So I think the 2-day dip that we were looking for turned into a half-day dip. It dipped a little bit on Monday, came right back and found buyers and went straight up and made new highs. So if we have outside days up in leading indices and then the big leader itself holds perfectly on a parallel channel bottom test, I guess we have to say that the 2-day dip isn't coming our way. So I think we're buying the dips in the ES tomorrow, and I have some charts to show you why. Traders, the next thing is this little swing day we have on the board up here, which I'll show you in a moment. There are swing days in both the dollar index and the euro currency. There's both an upswing day and a downswing day, and they look pretty good. Technically, they're picture perfect, and I'll show those to you, and I think you'll see what I'm talking about here. The swing days, when we see a swing day, we trade a swing day. Do they always work? No. No technical analysis tool or formation ever always works, but a lot of swing day videos I've brought your way. They've worked really, really well. So the swing days do work on average much better than failing. So hey, let's go with the swing day. I'll show that to you in a chart. And then finally we have soybeans. Soybeans staying in a nice parallel channel. And if the dollar index put in a swing day down, then we'd expect that the beans would get a little buoyant anyway. So nice to see the beans in a bullish channel, while we see what looks to be a downward move or a downward formation in the dollar index for Tuesday's trading. So let me show you that whole mess. Again, we're looking at outside day up or outside reversal days up in leading indices. And I'll show you a couple of swing days, both up and down in the currencies. And then, of course, we have soybeans. And with no further ado, traders, let's go to the charts. Okay, traders, the first chart we are looking at this evening is the Dow Jones Transportation Average Daily Bar, deemed, as you know, the leader of U.S. indices. It has been in this channel for 32 straight days. What's interesting about this channel, traders, is back in March of 2009, we put in a very same-looking V-shaped bottom, and we stayed in the channel for 46 straight days before it faltered even slightly. So if there's going to be a comparison, we have more days ahead. But what I found interesting was we dropped right to the spot where we always seem to drop before this thing turns around and makes a new high. So staying within this channel, whenever it hits the bottom of the channel, it seems to run back up and head towards the top. Now, I am not saying that we can't break down, because yesterday's video told you we were expecting a 2-day breakdown. But it came down for about half a day, bounced right here and went straight up and settled by its highs. At the same time, you had the NASDAQ put in a huge turnaround day. You had the Russell put in an outside day up. You had the ES put in what looks to be a little bull flag. And most of the U.S. indices took off after they made lows on Monday morning. So that is not a bearish look. That's a bullish look. Anytime you have a market that's been going up for a while, when it starts to go down, if it finds buyers and by the end of the day is up at its highs, that's a pretty strong signal. Now accompany this with the other charts I'm about to show you when we have an argument here, and let's go look at another chart. Okay, traders, I want to go through these charts relatively quickly. I just want to show you what I'm talking about. This is your NASDAQ, the NQM10. This is the daily NASDAQ bar chart. What we have put in today on Monday is called an outside reversal day up. It was going down on Friday. Monday it opened up lower and started to drop. Went lower than Monday or Friday's low. Turned around and rallied up higher than Friday's high and settled up here by the highs. That is an outside reversal day up, or at least an outside day up. The last one we seen was a few days, maybe 2 weeks back. We had an outside day up right here, an inside day, an outside day bigger than it, settled by its highs, and we rallied, rallied, rallied. So here we are. What I've shown you so far was the leader. The transportation average had that beautiful channel that it held in, and then one of the other leaders, the NASDAQ, has an outside day, turns around and settles on its highs. I say we got something here. Traders are going to rip right through these to make this fast for you. So let's look at the next chart. I think that what you'll find is very interesting here. We showed you this in yesterday's video. Flat tops equal market drops or produce market drops. And that will happen more often than not, but it doesn't always happen. And what this flat top's starting to look like is a bull flag. Because you can see that we're still inside of this channel, which is the very same channel that you could say the transportation average has been in, right? It's a very nice channel. We're still within that channel, and now it looks like we've built this bull flag. And if this is a bull flag, we're trading right here, right now. The likelihood is it wants to move higher. So now you've seen 3 charts, one follower, the S&P, one leader, the NASDAQ, and the main leader, the transportation average, all 3 of those looking bullish. So, hey, I can't call for any more downside. I guess we're not going to get the 2 days. Then we move over to the dollar index, traders. Look at this beautiful swing day in the dollar index. You had a big day up. Then the next day being Monday, you ran up, turned around, came all the way down and settled down by its lows. This is your swing day setup. How do we handle swing days? What we like to do is the next day, if it opens and travels up a little bit about to the day before's high, you sell it about there and expect a breakdown. That's how we handle swing days. So this is a swing day which is bearish for the dollar index, and at the same time, the next chart that you'll see is bullish for the euro currency because it's the very same thing. You have a swing day in the euro currency. You were going down, you went down again, then you came all the way down here, turned around, did an about face, and settled by its highs. That's a swing day setup. What we do usually with swing days is we wait for it to open, come down to about the day before's low, get long, and expect some kind of a rally. This is how we handle swing day buy setups. So there you have it. If the dollar has a swing day sell setup and the euro has a swing day buy setup, we have to step aside from the bear flag for 1 day, because we're day traders, and buy this and see what happens. The beauty of this trade is the stop goes down here and it's not so bad. It's not a really terrible risk, but it is a risky trade because it's against the grain. The grain is we just came out of a bear flag. Why should we be buying? Well, because one of our rules is you buy a buy swing day whenever you see one, and they'll work most of the time, so we stick with our rules. Next is if the dollar looks like it wants to go down, that normally gives some buoyancy to our grain markets. And we have a beautiful little channel that we've been in the soybeans. This is May soybeans. And in fact, this would be considered a flag right here. So breaking out of a bull flag and creating a bull channel. And if dollar wants to go down tomorrow, I think somewhere in here we buy this and expect it to pop up there somewhere. So here is how we want to play the soybeans. Traders, pull your own charts, do your own homework, never accept anyone's analysis without comparing it to your own. But that is a pretty compelling argument for soybeans, which helps us with our argument for the dollar and the euro. And of course, you've seen the bullish setups in the indices. So pull your own charts, do your own homework, and see if you can find these very same formations. So, traders, you've seen the charts, you see my argument, right? It's a strong technical argument. I do not like having to really be a buyer of euro and a seller of dollars when we just came out of bull and bear flags yesterday. But a swing day setup is a swing day setup, and if you follow trading rules, you must realize that if you take every swing day setup that you see, the odds are good that they work in your favor because, again, they work way more often than not. How do you handle a swing day? Well, if you were going to handle a sell swing day, traders, as an example of one on the board here, you had a market, let's say, that's been going up for a few days, up, up, up. Then one day it puts a real high in, turns around, breaks down, and comes towards the low and settles. What you're supposed to do is on this day, Tuesday, let's call it, when it opens, if it rallies up, 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 and gets somewhere near Friday's high, You go short there and expect a breakdown. That is how you handle a swing day. Stops need to be at least above the day before's high, and that is your sell swing day, and that is how I want you to handle the dollar if you trade that, and opposite if you trade the euro. You got a buy swing day on your hands. Now, the other thing is these indices, the outside day up. Listen, this market's been going up for days on end. I am not going to be the guy to call, hey, it's got to come down for 2 days or 1 day or at all. I read the charts. Technically, yesterday it looked like it wanted to come off. It did a little bit. Buyers came out of the woodwork. I don't argue with markets like that. I follow them. So I'm going to follow the leaders here. The S&P or the ES is the follower. I'm going to trade that or instruct you traders where we're getting in and getting out and let the leaders do their job. If they turn around and lead us down, we're day traders. We'll deal with it, and tomorrow we'll be sellers. But from what I can see, we're buying on Tuesday, so get ready. So come on down to my site, traders, at www.livewithoscar.com. Jump into the chat rooms. Allow us to show you where we found these ideas, what they look like on the charts, and where we'd like to buy and sell. Make sure you come on down. It's a free room. Can't hurt you to check it out and see what we're doing down there. Guys, anything else I need to mention before we get out of here?
No.
Good. We're done. All right, this is Tuesday. It's Monday night for Tuesday. We've got a long week ahead of us, so get ready. Give me a call anytime day or night, 702-629-4755. Traders, a stop is your best friend. Never trade without stops. Always put them in first. And once your stops are in, it helps your emotional state. And what I like to tell you to do is say this to yourselves over and over again. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.